Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, FUNDS.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing the role of beneficiary designations in final expense life insurance. So it's kind of simple, but it's a little bit more involved than you're probably thinking there might be if you're not in the insurance industry. But let's talk about the most basic purpose of a beneficiary designation. The key role is to direct benefit payouts, and the benefit is the life insurance benefit. So when you select a beneficiary, that's going to determine who receives the death benefit from the final expense life insurance policy. Now, that's going to be the same whether it's term life insurance, whole life insurance, all of that, whether it's a $10,000 policy or a $10 million policy. They're all going to have beneficiary designations that you get to choose. And typically, you're going to choose one, two, maybe three. We've had as many as seven. It just depends on what your wants, needs, and desires are. But you can specify who is going to be the primary beneficiary. And then you can also designate who's going to be the secondary or contingent beneficiary. And that can be a person. And depending on the insurance company, it can sometimes be organizations or even trusts. But that's policy dependent. So if you have really specific needs and you want an organization or a funeral home to be the beneficiary, then some companies don't allow that. Some do. We can certainly help you out and help you understand which one's going to be the best fit for you. But a typical example would be you would have a married couple and say they've got two children. So you've got one spouse that wants a policy on the other spouse, and the other spouse wants a policy on the other spouse. So they're both going to have, for the sake of our talk here, they're both going to have insurance policies on each other. Because think about it. If either one of them dies, there's still the same amount of bills in the whole household. They've still got the children. And if the children are young, that's going to be many years of raising children. And then there's college educations and everything like that. So typically what would happen is one of the spouses would be the insured, and then they would select the other spouse to be the primary beneficiary, because if something happens to them, they want the spouse to get the money to be able to spend on the family and the household and the children. And then as a secondary beneficiary, sometimes that would be children if they're old enough. You want to be cautious about making children beneficiaries if they're under age 18, because in most cases, they'll have to wait until they turn 18 to access to the death benefit. Just keep that in mind. That's a beneficiary designation you want to be cautious of. But let's say that their parents were alive, or a brother or a sister. It'd be somebody that you really trust, and they could be the secondary. Because think about it, the chances of both people, both married couple, dying at the same time it's remote. But if they are driving somewhere and a dump truck crosses the yellow line and gets both of them at the same time, and if they're the only beneficiaries on the policy, now all the life insurance proceeds get caught up in the estate and are subject to probate taxes in most cases. Or it could certainly push the estate into a probate situation, which will lock up that money for a long time. So we always want to make sure that we have a beneficiary and that the death benefit is paid directly to them upon the insured person's passing. And those funds can be used for anything. So with the burial insurance policy, if you had a $25,000 policy and it only costs you $15,000 to get buried, your beneficiary is going to have an extra $10,000. And in most cases, we would tell you to direct those funds in advance. We offer a free funeral and estate planning guide on our website. You can download that and print that out for free. And we recommend you fill that out and keep it with your insurance policy. And that will direct your beneficiaries to do what you want with that money that you've provided for them. And in some cases, that means just, hey, have some money. I appreciate everything you've done. And, here's a blessing for you. And in some cases, that extra money is going to be needed to pay for medical bills or credit card bills or, some other bills that, that if you don't take care of those, the companies that are issuing that credit are going to come after the assets that may be present. So another role of the beneficiary designation in final expense insurance is simply just providing financial security, for your loved ones. That's why we buy life insurance. We don't buy life insurance necessarily because we get any benefit. Although there are some living benefits that are really important, and there's some riders on there, and depending on the insurance company, some riders that can benefit you while you're alive as well. So we don't want to downplay that, but ultimately, we want to provide final expense coverage to the beneficiaries so that they'll have the necessary funds to cover any funeral, burial, cremation expenses, any final life expenses. And by naming the appropriate beneficiaries, you're going to alleviate that financial burden at a difficult time, because too often, what happens is somebody doesn't have insurance and then they pass away, and people are having fish fries and chicken fries and bingo games and everything, trying to rely on the good of the community and the family. But let's face it, nobody's rolling in money these days, and man, just we've seen it happen far too many times when, just the deaths keep coming and coming and coming in a family, and at some point people can't give anymore. And boy, I tell you what, this burial final expense insurance, cremation insurance wipes out that. It just takes care of it, and you just never have to worry about that again. And you don't have to worry about leaving that legacy. So next concept here is just establishing successor beneficiaries. So we've got the primary beneficiary, which is going to be the first person. Typically, that would be a spouse or a partner. If it's a single parent or a divorced parent, in many cases, it's going to be one of the children that's going to be the primary. But then we would move on to the secondary or contingents, and that can be anybody. As a rule, it depends on the insurance company too, because different insurance companies do have different requirements and limitations on who can be a beneficiary. But let's say, it's not, we see this a fair amount, that a parent will have, say, two or three kids, and there's always one that's better with the money. And the parent just really feels more confident putting them down as the primary, because they will know that they will take care of things in a responsible manner. And then, God forbid, if something happened to them, the other one or two or three or four children could be the secondary or contingent. And that way, everybody's on the policy, and everybody should be comfortable and happy with that. So we just want to make sure that we have adequate beneficiaries so that we can avoid the money going into the estate or contributing enough to the estate, which is physical assets like property and houses and vehicles and funds in the bank and all that. Because we want to avoid this thing called probate. Probate. It depends on what state you're in. Typically, most of the states are going to set amounts of, how much can you have in assets before a, all your assets have to go through a probate process. And when my dad passed away, we were like $7,000 or $8,000. If we would have done things a little bit differently, this was quite a while ago, we could have just transferred some funds or anything. We could have totally avoided probate, and it just stunk because it was 6 or 7 months getting this thing figured out for something that really didn't need to happen. It was our ignorance, our family's ignorance at the time. But I guess I'm just providing that so that you don't make the mistake. Understand your state probate laws, and just, you know, y- if you've got a substantial amount of life insurance, you do not want it going back to the estate. Name beneficiaries, and it totally eliminates accidentally pushing your estate into probate. And what that means, it's just going to be a quicker disposition and distribution of funds. And especially if this is a funeral, a final expense, cremation, Man, we want those funds released quickly. We do not want that tied up in probate, because the funeral homes are not going to wait 6-7 months for that money to come out of probate. That's a real challenge. And then also understand, when choosing a beneficiary designation, you have total control. So if you decide to change or update your policy, or you no longer, want somebody as a beneficiary, or maybe one of your beneficiaries passed away before you did, or maybe they became irresponsible. I don't, maybe they got thrown in jail, or maybe things just change. We know that dynamics of a family change, and unfortunately, sometimes families struggle, and you know, it just understand that if you choose a beneficiary, and at some point you want to change that in the future, you can do that anytime you want, whenever you want, and you can. Typically, what's involved is you just get a change of beneficiary form from the insurance company. You just fill that out and mail it in, and they'll keep it on records, and that will take care of everything. So we all know that things happen in life. Marriages happen, and divorces happen, and births, and passing away of loved ones. You know, life's full of unexpected things, and it's really nice that, you know, when you're selecting a beneficiary, that you've got the flexibility to choose any one you want, depending on the insurance company, of course. So some companies are very strict about who can be the beneficiary. Some companies go under what's called insurable interest, which means you would have to suffer some sort of a loss if the person who is insured passes away. And what that means is, some companies would not allow your postman, that brings you your mail, to be the beneficiary of the policy, even though you've got a great relationship and you're close and you may not have any other family. Some companies would not allow your postman to, or your pastor or anything like that, to be the beneficiary. Other companies out there, yeah, they don't even care. So it just really depends on which company you go through. So I hope that's given you a good overall view of the role of beneficiary designations in final expense life insurance. My name is Randy Vandervate, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.